Hello and welcome to Your Daily Five. This is Larry Tentarelli. I'm the editor and publisher of the Blue Chip Daily Trend Report. And I want to share with you today 5 charts that are very high on my screen that I think are important right where we are. So we'll get started. Brief introduction. You can find me online. My website is bluechipdaily.com. If you're on Twitter, my handle is @LMT978, and I post frequently throughout the day. So we'll get started with the first chart, and I think this is one of the most important charts, obviously, on the screen, because it's the overall market. So this is the S&P 500, and a couple key levels that I'm looking at. So my time frame and what I focus on is intermediate to longer term. So my ideal holding period is generally in the 3 to 6 month range or longer, based on if the charts are working. So I do a lot of trend following and I focus on the major trends, not so much intraday. But the S&P is a very important chart, obviously for a number of reasons. But what I'm looking at here, so the S&P had a very sharp drawdown, as we know, from 462 to 380. The S&P was down for 7 weeks in a row. NASDAQ 100 was down for 7 weeks in a row. So that doesn't happen very often. And it looks like we're obviously going to snap that streak this week based on where the markets are. But there's a couple key levels that I'm looking at. So the first thing, the daily close over the 20-day moving average yesterday, that's a good first start. And we can see the S&P, just by looking at this chart, SPY hasn't closed over the 20-day since the beginning of April. So whenever a stock is in a decline below the 20-day moving average and it can't get above it, that just signals a very weak market. So this is the first checkpoint. And what this does is it takes some pressure off of the sharp decline in SPY. So the next level that I want to take a look at here, and this is key for my time frame, 420 to 425. And the reason why I've got that level on my screen is we had an 82-point drawdown in the S&P from 462 to 380. So if we do basic math for a 50% retracement, that would be about 41 points, which would put us at 421. Also, I use moving averages extensively for trend following. So the declining 50-day moving average is often a point on market rallies where technical sellers will come in to the scene. So what I'm looking at here is if we get some follow through, I want to see how SPY handles 420 to 425, and then obviously evaluate it from there. So right now, the market's in a primary downtrend, but it does have a nice bounce. And I don't get into the conversation of, is it a bear market? Is this a bear market rally? Is this the bottom? I don't try to make market calls or very short-term predictions or things like that. What I do is I stay focused on the chart. So what I know for now is S&P's been in a sharp downtrend. It did hit a longer-term support level around 380 to 385. So now it's in a recovery phase. So what I want to do from here is evaluate how does the market react. Obviously, the FOMC is June 15th, and that could give us some direction as well as bond yields. So now what we're going to do is take a look at some stock ideas that are on my screen that I believe are set up well here, and especially if we get any follow through to the upside in the S&P. So we'll start with Albermarle. They're in the materials sector in specialty chemicals. They are a producer of lithium, and lithium obviously is very important for electric vehicles and EV batteries. So Albermarle has been on our members' top 25 list for the last few weeks. What I do every Sunday is I publish for our website members my top 25 stocks list going into the week, and I diversify it by sectors. But what we see on the Albermarle chart, now I will say this is a higher volatility chart. So I've got some lower volatility charts as well, but Albermarle is trending higher. So right now it's over 4 moving averages. The 20 days higher, 50 days higher, the 100 day is starting to flatten out. and the 200-day moving average has been trending higher. So sharp pullback. And what I've noticed with Albemarle is it tends to trade a lot with the EV stocks, with the electric vehicle stocks, which makes sense because they're tied to the lithium space. But in either case, it's had a nice recovery trend higher. Now, keep in mind, the S&P 500 was down for 7 weeks in a row coming into this week. But if we see Albemarle has been trending higher right after earnings, and right where it is now, 255 and change when we put this chart together. So 255 and change is pending the highest close really in all of 2022. So showing a lot of technical strength. It's in an uptrend. We've got higher highs. We've got higher lows, rising moving averages, and trying to break out right where it is. And if we take a look down on the screen, volume after earnings, and then we can see this week there's been 2 nice high volume upside days. So this is a higher volatility chart, and we can see from 249 to 232 in about 2 days, 244 to 228, 243 to 204. So this is definitely higher volatility, but it's trending higher and very constructive overall. So now we're going to move to chart number 2. And this really is on the opposite end of the volatility scale. So Bristol Meyers Squibb, and we took a look at Bristol Meyers on this program back in March as well. But Bristol Meyers it really fits the mold of what's been working in 2022 and what's been working through this Fed tightening cycle. And what that mode is, or what that model is lower valuation, lower volatility, and higher dividend yield. So Bristol Myers, 2.6 times dividend, 27 times earnings. I believe it's about 12 times forward earnings. But if we take a look at how this stock has performed in 2022, so we know it's been a very difficult market for the indices overall, but Bristol Myers, as the S&P and the NASDAQ were down 7 weeks in a row, Bristol Myers really just consolidated. So the sellers were not very aggressive whatsoever, holding over the rising 50-day moving average. I've got a position here in Bristol Myers, and if the stock can close over 79, then I think it opens up that chart to higher, but a very, very constructive chart. And we can see really no closes at all below this 50-day moving average going back to December. So that's a very strong chart in the healthcare sector. Chart number 3. So Teck Resources, this is it's a higher volatility chart, and this is in the materials and metals and mining group. So they're based out of Canada, and we can see that this stock as well, it's been a little bit volatile overall with the markets, but we've had the S&P 500 down here, we've had the NASDAQ 100 down here, and then we've got Teck Resources, which has really just been consolidating all through March, April, and May. And now it's at a very close level, very close to breaking out possibly over $43, which is a key overhead level. So 37 on the downside is near-term support. It did have a couple shakeouts, so this is a higher volatility stock. But $37 on the downside, and then $43 on the upside. So what I'm looking at here, over 4 rising moving averages. Volume has been coming up a little bit, but really the key level, if the stock can close over 43, then I think it opens up that chart to higher. And if you take a look at the industrial metals group, XME tested down to the 200-day, Nucor, Freeport, Alcoa, they were all at the 200-day. And Teck has just been the relative strength leader. So that's very high on the radar screen, right where it sits. And then we'll take a look at the last chart. And I've shared the energy sector really going back to last year. So this has been a top idea now for over the past year. And it's still my top ranked sector. Now, what I will say is that where XLE is right now, 86.94 and change, could be a little bit extended on the chart. It's up 6% or so for the week right now. So could be a little bit extended on the chart. Some of these charts like Schlumberger are just starting to break out, but XLE is my top ranked sector. It's been our top ranked sector for all of 2022. It's my biggest overweight. I've got a position in XLE and Chevron and Devon Energy. So my biggest overweight by far. The sector trades for 10 times forward earnings. Dividend yield is just under 3%. But yesterday, 47% of the large caps in the energy sector all made new highs. So 26 out of 55 made new highs. So that's a lot of strong breadth that's in the sector. If we take a look at the volume and the accumulation, we can see, especially over the past 4 to 5 weeks, mostly upside volume coming in. So there's a lot of sharp sector rotation that's in the markets right now. Obviously, the markets can pull back at any time, or these sectors can pull back at any time. But XLE here or on any pullback is still our top ranked sector. And then finally, you can find me on our website, bluechipdaily.com. We have a 30-day free trial offer going for anyone that's interested. So I appreciate everyone's time, and I hope you enjoyed the video.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.